So they say there's no place like home. Well, buying a home can be a daunting challenge. It can be exciting. It can be full of anxiety. But wow, it's one of the greatest achievements you can have personally and financially in your life. So stay tuned for this video series will be 10 steps to buying your first home. The pride of home ownership, it's a real thing, not to mention the financial benefits of home ownership. So homeowners on average last year had a net wealth of around $255,000, while renters, they had an average net wealth of about $6,300. Most of the difference comes in the equity and the wealth they built by owning a home. It's still part of the American dream. It's still reachable for most people. So we're going to do a whole video series here. It's going to be 10 steps of buying a home. And what I want to go through is a fair amount of detail. So there's going to be 10 different videos here. And I would invite you to, if you want to watch the whole series, go ahead and subscribe and hit that bell. That'll get you notifications for when the next videos come out here. And just want to make sure we're leading you along the right path and get all the information you need and express, why it's so important to be a homeowner. Your first home may not be your dream home, but it's, we're going to find something for you that's going to be going to fit most of your needs. And actually buying your first home, even if it's not your perfect home, is an important step to getting to your dream home someday. All right, so step one is, of course, deciding to buy a home. It may seem like a daunting task. It may seem like you have no clue what's going on. You're going to meet a lot of different people in different professional services, lenders, inspectors, appraisers, title people, realtors. You're going to see legal paperwork that may seem like it's written in a foreign language. You're going to have a lot of documents through the lenders that also, same thing, a lot of very complicated paperwork. And that's where having professionals on your side to interpret all that and to help negotiate the whole thing is key here. So what we're going to address in this first part of the series is there are 7 common fears in buying a house, especially for a first-time home buyer. And then we're going to discuss 4 common principles that work generally in all real estate. And hopefully by the end of this first section, we'll have alleviated a lot of your fears. All right, fear number 1, I can't afford to buy a house right now. Well, the fact is, until you do the math, you don't really know if you can or can't afford to buy a house. And when I say do the math, we look at a lot of different factors, and that'll be with when I meet a client and we discuss these things, we have I call it buyer consult. We sit down and we go through the whole process of buying a house. But we're going to talk about, different costs involved. There's different costs as far as your down payment, your closing costs, getting an appraisal done, your inspection, home inspection. And these costs can add up. In certain markets, we oftentimes get sellers to pay for some of these things. Another thing we do is we discuss with a lender. If you haven't talked to a lender before you meet me, or, we can get a lender recommended to you. I've worked with many wonderful lenders around Fargo Moorhead here, and I have a few trusted ones that I really work with a lot. What they do is they do things like they run your debt to income ratio, and that is how much debt do you actually have compared to the income you produce. And they have a lot of guidelines based on different criteria of how much debt they're comfortable with you holding, including the debt that will be created by owning the house. Another thing you can do is compare numbers of, the rents versus what does it cost to actually own a house. The rents in the United States have been skyrocketing, especially in the last 5 years. On this graph here, it shows what the rents, how they've increased over the last, how many years here. But 5 years recently, they've really gone up, and we actually are seeing a little bit of a lag in those numbers, because what happens is, for instance, if you have a lease here that goes through this coming summer and they've not raised your rent yet, they're going to raise your rent, and those new numbers are going to keep showing increases in rent. I own rentals myself. I can tell you right now, the rents are going up. There's no vacancy in Fargo, and we keep raising rents. The other thing is looking at, sure, what is your initial investment here, but what is your return on the investment? How fast can you build appreciation? The tax benefits you get from this. There's a whole lot of different things involved that you may not think of. The house may increase in value as while you're paying the mortgage down. So you have to look at different factors other than just I can't afford it, or, that kind of thing. So we analyze this and we find out, can you afford it and what can you afford? Fear number 2, I should wait until the market gets better. Well, the fact is there is never a wrong time to buy a house. So we had a lot of craziness in the last couple of years with mostly because of COVID and because we had extraordinarily low interest rates. Everyone thinks great time to buy, low rates, we can get a house. Yes and no. My buyers had a lot of struggles in the last couple of years trying to find houses to buy, partially because so a few factors. COVID kept a lot of people at home. And so what happens, you're at home and they're telling you you can't go to your job, you're going to work from home now, your kids are home at school, you need to accommodate people being at your house regularly, low rates, go finance the house, refinance the house, and go, do some work, make another bedroom, whatever it takes to do, make a space, more suitable for working. So a lot of people actually stayed in their homes and didn't put them on the market. What this did was created a low supply, and now we have high demand with all these buyers who say, let's go buy a house, 3% rates. Supply and demand, that creates a lot higher housing prices. And in addition to that, I would go book a house or try to book a house to show a new house to come on the market. I'd have a handful of clients call me, I want to see it. Oftentimes I was lucky to even get in to see the house. We use a scheduling program called Showing Time. We schedule it and there'd be no slots available to see it. Or I would see like one 15-minute window. I would literally call 2 or 3 of my clients and say, hey guys, we're all going at the same time. I know you're all separate buyers, but you're gonna go upstairs, you're gonna go downstairs, you go look in the backyard. Let's take a look at the house, and then we'll have separate conversations about it. Or sometimes I would not even have my clients with me. I would just go preview the house, take some video, give my opinion on the house after seeing so many houses. I kind of knew what they were looking for. Give them an opinion and decide if they really want to see the house. With multiple offers, there could be 5, 10, 15, 20 offers in the same house. They're driving the prices up. They're waiving inspections because they can't get the house if they're going to do an inspection and someone else says they won't. They're doing what's called an appraisal gap. They're waiving the appraisal, saying that if the appraisal comes in low, I promise I'll make up the difference with cash. People were doing cash offers. Certain types of offers were not getting accepted. It was crazy. It was not fun. You might think that would have been a great time to buy a house. If you got lucky and got a house, it was a great time, sort of. Now the tables have turned a bit. We still have a lower inventory, but having the higher rates, people are a little more, resistant to that buying a house. They think that these rates are going to make it so they can't afford the house. In some cases, they're correct. Sometimes that's true. Again, we'll go back to the last fear. We got to do the math, figure this out. But, until we sit down and figure that out, we don't know what you can afford. What we're seeing, though, is the sellers are willing to negotiate a bit more on the sale of the house. Houses are sitting in the market longer. It's winter right now where I'm filming this video. Especially if your house is vacant, you don't want to be paying, heating costs or risking frozen water pipes or people breaking in a vacant house as the house sits longer and longer. So they're willing to do a little more negotiating to sell the house. I'm personally buying my own home right now. We got the seller paying closing costs. They're doing a bit of a reduction on the house. I am paying, almost 6% commission or interest on the house. And my payment is higher than I would like to have, but versus renting, and the fact that I'm building wealth, it's a great decision for me. So, even during the Great Recession we had, 7, 8, 9, yes, there was big dips in the housing. Fargo never saw a dip. Other parts of the country did. But it was a 2-year lull and then back to appreciating values again. So if you had that house and held on to it, you're back to gaining wealth. You still have a home. And even during the worst of times, it can be the best time to buy a home. Fear number 3, I don't have enough money for a down payment. The fact is, there are a variety of down payment options. So I did a video here recently, and I can link that here too. Basically about do I need 20% down to buy a house? Traditionally, historically, people thought that's the way you do it. If you want to go buy a house, save up 20%, put your down payment down, buy the house. There are different types of financing nowadays through FHA, through the VA, through USDA. Yes, the USDA, it's the same USDA that grades your meat and that kind of stuff, checks your produce. They have rural programs. So if you're in a rural area, they can get loans for 0 down. If you are a veteran who qualifies, you can get a loan through the VA program. 0 down loan again. FHA can be as low as 3.5% down. But even a standard conventional mortgage, which I'm getting on my house now, is 5% down. Yes, there are some drawbacks in some ways because if you don't put 20% down, they have what's called mortgage insurance, PMI. And what they're doing is they're charging you a fee. And because there's so little equity in the house there, it's a little protection for the lender, saying if you default on your loan, it's some coverage for them as well. There's also some first-time homebuyer programs through the different lenders, through credit unions, the banks, mortgage brokers. Also, the different states have different first-time homebuyer programs. And a fun fact is, you don't always have to be a first-time homebuyer. I think North Dakota Housing allows a 3-year gap. So if you owned a house 3 years ago and now are buying another house, you can still qualify for some of their programs. They'll give you down payment assistance, which is the form of a zero interest loan that you only pay back. It's prorated. So if you own the house, for a certain number of years, you may owe a certain portion of it back. If you own the house, I think for 8 years, it's forgiven. So yeah, there's a lot of different options. You don't need 20% down. You may get by with nothing down. If you get the seller to pay closing costs, you can get into a house for almost no cost at all. Fear number 4, I can't buy a home because my credit score is too low. Well, fact is, a less than a perfect credit score won't necessarily prevent you from buying a home. And the other thing is too, is when I said we go back and do the math when we first start off, one thing a lender is going to do for you as well is they're going to check your credit and they're going to check your FICO score. They do use your credit score to, it can help you get better rates if you have a higher score. But surprisingly, you can have credit score that's fairly low and still qualify for certain programs. I know these programs change all the time, so I'm not going to quote anything, but I've seen below 600 credit scores qualify for certain programs. A nice thing about pulling your credit too is you can see, if your credit score is not ideal, what is wrong with it? Or why is it low? Did you have some late payments? Was there a mistake on your credit score? Actually, there's been mistakes in reporting before. A friend of mine checked her credit score and found out that she was the victim of credit fraud. Someone had been using her credit. She wasn't even aware of it, and they found all this debt, and they figured it all out. But her credit score was severely impacted from that. They figured it out. If your credit score is not perfect, again, the lender, or if we can find someone who can do some credit counseling for you. What they do is they advise you on different ways to pay off certain debt to improve your credit score, whether it's credit cards or getting rid of some old, collections, that kind of thing. But yeah, your credit score is something that can change. It might take a few months. It might take a little bit longer. But if you go get it checked out, at least you know where you stand. Are there mistakes to fix? Can I improve my credit? Lots of different options. You're not stuck if your credit score is low. But yeah, pay your bills on time. It's frustrating. I might have to use credit cards to build credit, but I use credit cards. What I do is I spend everything on my credit cards, pay the credit card down to zero. I buy what I can afford, and I don't build up a bunch of credit card debt, but that builds good credit. So lots of ways to adjust your credit score. Don't worry. Find out first, then figure out what needs to be done about it. Fear number 5, I can't afford to buy my dream home. Well, the fact is, the best way you can get closer to buying your dream home is to buy your first home. So in reality, most people are not going to be able to afford their first dream home right off the bat, especially if you're single, or maybe if you're single income or younger and you're really established yet. Credit score is not quite there yet, but you may not even if you think it's your first home, is your dream home, it may not be. Who knows where you're going to be living long term with a career change, or when you maybe start a family, or a lot of different factors. You may think your dream is to have, a spouse and 1 or 2 kids, and end up having more kids than you planned, pets, whatever it is. Dogs are a huge factor for my clients. Can I have a spot that has space and a yard? Well, that might not be your situation right now, and it's something you want 5 years from now. Who knows? But buying that first home is a great way to build equity to allow you to step into that next home. So let's say, just for easy numbers, it's tough to find a house for $100,000, probably impossible now, not quite. But you buy a house for $100,000 and you own it for 5 years. If it's appreciated 4% over those 5 years, and you've been paying down that principal, you may, easily build $20,000, $30,000, $40,000 in wealth in 5 years or less. Over the last couple of years, we've seen, 10, 11, 12% appreciation on homes in the Fargo Moorhead area. Nationwide, we've seen much higher numbers than that even. So what that means is you could buy a house for a couple $100,000 now, own it 5 years, and have a significant amount of savings in your home to help you buy that dream home. And when you're ready to make that step, you are going to be so happy that you have all that equity in your current home to allow you to take that next step. I'll say it over and over. I'm a real estate guy. I own real estate. I strongly believe in having that equity in your home to help you buy your next home. I also used it to buy my first rental properties. It allowed me to start investing. It's just a great way to build wealth. Fear number 6, should I buy a home when I'm uncertain about my domestic future? Fact is, you don't have to wait until you get a spouse or partner, or until you have a family with kids. This kind of ties back into the last one here. You may not know where you're going to be down the road. You may not know what that future looks like, but in the meantime, why not build that wealth? The last numbers I saw were that 27% of home buyers are single, and a good portion of those are also single females. It doesn't matter. Go get in there and start, get out there, buy that house, get that wealth. Why wait? It's such a great way to build the wealth. It's and living in a house lets you kind of know what you like and don't like about the house as well. So when you're ready to go buy that house in the future, you kind of know your likes and dislikes about the house. When you do find that significant other, if you're growing a family, they're going to have some input for you. They might not like the house you're in. They may love the house you're in, and you stay there forever. They may bring a second income to the house that allows you to buy the house of your dreams, rather than kind of settling for, your current situation there. But that current situation could be the key to building some wealth and getting what you really want. So I just keep saying, don't wait. Go after it, get that first home, and start building that equity. Fear number 7, should I pay off my student loan debt before buying a home? Fact, student loan debt does not necessarily prevent you from buying a home. This kind of goes back to the math we talked about earlier too, and this might be a little more in the realm of the lender. But when the lender is looking at your history, your credit, your debt to income ratio, your job history, that kind of thing, they're going to look at your student loan debt as well and make some considerations for that. Part of that is like, what do your payments look like and how much debt do you actually have? And so they're going to figure that into your debt to income ratio. And sometimes you can refinance some of that debt. If it's too much for your debt to income ratio, maybe they can counsel you on where to pay off some of the debt, whether it's your student loan debt or some other credit card debt, that kind of thing. But they'll find those numbers for you and tell you exactly what you need to do to adjust and to adapt and to be able to qualify that loan for the loan. So student loan debt, yes, can be burdensome. It can be expensive, but it does not necessarily mean that you cannot buy a home. So let's move on to the 4 fundamental principles of real estate. So years of experience in real estate have, helped me identify some of these common principles, and they apply to nearly every aspect in the process. So I want to identify some of the basic mistakes and help you navigate through these different principles. All right, so principle number 1, the rules of real estate are always local. Great example. Here's a headline: home prices post-record 18% drop. This was a headline from CNN back in 2008, I believe it was, during the Great Recession. And what this was basically saying was nationwide, we had an 18% drop in home values. The article goes on to describe how some areas like San Francisco and other places had as much as a 30% drop in home values. Well, we didn't see that in Fargo. I think, so I've seen the numbers back in 7, 8, 9. We had a 2-year flat line of home prices. Another realtor friend of mine actually says that technically it was a 0.1% drop. That's nothing. That doesn't count. We have a very diverse economy here in Fargo. We have very conservative lending practices here. People are more conservative. They don't go crazy and try to go get these crazy houses. And you see what the house prices do in California and other parts of the country. And people here are just a little more conservative on the economic standards there. So we didn't see the big price drops. In fact, like I said, we had a holdout for about 2 years on pricing, and then it started to go right back up with the rest of the country. In fact, we didn't see a drop in the jobs markets here. We never saw above 4% unemployment rate here. Very hyper local to Fargo, very different than even other parts of the state. If you go out west, the western part of the economy is just greatly, affected by the oil prices, by whether they're drilling or not or expanding, those kind of things. You go across the border, and of course we deal in Moorhead here. Go to Minneapolis, completely different market, has nothing to do with our market. I'm technically licensed to do real estate in both North Dakota and Minnesota statewide. I would probably not do, other than personally for an investment property, I wouldn't be helping someone buy a house, say in Duluth or Minneapolis or Bismarck, because those are not my markets. I would help, instead I'd help find a local expert that I can even help interview realtors in other markets, help find someone to trust out in that area, and refer the business out to them so that someone local is helping you with that process there. So principle number 2, the best deals in real estate are usually win-win. So what I tell people, my clients, is yes, we're going to ask for things. We're going to ask for everything you want. We're going to negotiate prices. We're going to negotiate inspection items, different things like that. So we're going to you generally ask for the world, ask for what you want. But just understand, you're not always going to get what you want. There's going to be negotiations. The sellers have things they want out of the deal as well, or vice versa. If you are a seller and you have buyers looking at your house, same thing. We're negotiating. Everything in real estate is negotiable. But at the end of the day, we want to make sure that you get the things that are most important to you, the sellers, the other party gets what's important to them, and that everyone is happy. If you start making crazy demands on people, you can really screw up a real estate deal. One other side gets upset or gets contentious about something, and they're going to stop negotiations. So we try to make it a win-win for everybody, and that's just, and why not? Why not have a good deal with the other realtor, with the other party, with you, and make sure that people get what they want. Everyone's happy at the end of the day, and no one has any bad feelings. Principle number 3, price and value are not the same. People often make the mistake that when they focus on price and not value, that they're going to get something cheap. That's why, if you go to Amazon or different sites, reviews are so important. Yes, you can get something affordable, but it may be poor quality. A good example in the real estate world is home builders. I worked for 7 years in land development specifically. So I worked with the developers, and we developed all around Fargo, Moorhead here, all these different areas with Osgood and the Wilds and the Pines and Timber Creek and Brant Crossing. And there was 14 developments I worked for. My sole job was to sell lots to builders. So the builders would buy the land for me. And in that process, I got to know most of the builders in Fargo, Moorhead. And of course, builders build in different price ranges, and for certain reasons, they're going to do a very entry-level house for a certain price because that's what's affordable for somebody. You have very high-end luxury builders. You have builders with different styles and different price ranges. You may see a handful of different builders in the exact same price that build what looks like a similar quality product, until you dig into it and you realize one builder is using subpar contractors, to do certain work. They're using subpar materials. And so what looks like, maybe the same 2 houses, similar floor plans, each priced at say $300,000, one might be great quality, one might be just awful. So one thing that I do as an investor is I look at properties that are fixer-uppers. So I go through and I'm looking for price first, and I'm looking for what needs to be done to the houses. Say I look at 2 houses that are rundown properties, they're $100,000 a piece, and they both look like good deals. Until you dig into it, is there value in both houses? One house may need some cosmetic work. The other one may have $30,000 of foundation issues in it. You don't know. It might need a brand new roof. It might need lots of things. So in that case, you negotiate the price down so that the value matches the price. Just buying, you probably experience this in life. You go cheap, and sometimes you get cheap. You go expensive, and it may not even be worth what you paid for it. Think of certain designer products, that kind of thing there. So what we're doing as a realtor with my clients is to help find the best price, but also make sure that you're getting the value with that price. A home is a huge investment. You really want an expert in your corner guiding you, not just me as the realtor, but also are you working with a quality lender? You're going to pay fees to a lender to get a loan. Are the fees worth it? Is the lender doing their job? Home inspector. Typical home inspection costs about $350 to $400. Let's say you go find the guy that's charging $200 to do it, but he's not experienced, and he's never, the first year in home inspections, and he misses a $10,000, foundation repair. Was it worth saving $150, $200 on the inspection? It was not in that case. So again, value does not always equal price. All right, and principle number 4, choose with your heart and with your head. So what that means is when we go look at houses, we're going to look at what satisfies you, what makes you happy, what's going to be a great home for you. We're also going to look at the logistical things, the rational thoughts, so we want to say we balance emotion with rationality. And so when I show houses, we make a list of what your wants and needs are, and we're going to go out and we're going to try to find the thing that fits most of those things for you. When you walk into a house, there might be a certain feel of the house, it might be a certain aesthetics, it might be something about the neighborhood, something that you fall in love with. When I walk through the house with you, I'm going to look at it more objectively. I'm going to look at potential repair costs. What is this neighborhood like? Is it a deteriorating neighborhood? Is it a neighborhood on the grow? Different amenities in the neighborhood or things with the house, quality of the construction. So we want to make sure that we have both heart and mind in mind when we build or when we buy houses. Very important to make sure that you're happy that you're there and that you have a sound investment that really has true value. And that's what part of my job is, to help you find that perfect place. So this all may seem like quite a bit, but in the end, all you need is a great team around you. And that's what I consider my job to be. So in addition to the services I provide as a realtor, I have connections with just most amazing people, team members that, in the whole process, lenders, contractors, developers, inspectors, appraisers, title people. There's three main things you really need to know in the buying process. And, so we mentioned knowledge of the local market, knowledge of your personal criteria, and the buying process itself. Really, what you need to know is your personal criteria. It's my job to educate you on the local market, and it's my job to educate you on the process of buying a home. I consider it my mission to transform lives through home ownership. And that includes all those things, all these steps we talked about, and educating you, making sure this process is exciting, it's fun, it's stress-free, and in the end, you get a home that you're very happy with. So going forward, we're going to go through the rest of these 10 steps. Next episode we're going to have here is finding an agent. If you want to continue on with this whole series here, I suggest, as I mentioned in the start here, is that subscribe here and then hit that bell for notifications. And if you know someone else is looking to buy too and would be interested in this information, please, I'd love it if you shared that with them. You can also reach out to me directly. You can call me here at 701-793-8543, or you can shoot me an email. It's mark@jkpropertypartners.com. Mark is with a C. So yeah, love to hear from you. If you have any questions, please reach out. Please feel free. Meet up, let's grab some coffee, whatever. But this is one of the things I love most about my job, is especially finding someone their first home. It's exciting, it's fun, and we just want to, I just want to make sure that I'm doing the right job for you in finding you that perfect home.